Most of Asia is in the red right now.
It's a largely inline set of HCL technology, but in such a macro environment, uncertain environment, no negative news is actually good news and is a positive surprise.
Look at the rally that we've seen in global stock markets, especially US. That has been driven by PE expansion. If you look at earnings expectations, they have contracted from around plus 5% at start of the year to around flat right now.
We expect FY24 to be a very strong year for financial services.
Nifty absolutely quiet, just about 15 points in the green.
Macro is the bigger challenge, not only for India, I think more globally than India.
Obvious risks in areas like semiconductors where there is a slowdown that is anticipated.
I do believe that we can grow the savings line of business in line with the nominal GDP growth rate of the country.
I have not understood what the logic is for a cap on two-wheeler pricing, for example, to be 1.5 lakhs of rupees, because that is the bone of contention as I understand it.
Oil to chemicals business, which is a key reason for the recovery this quarter. There's a sequential recovery that we're expecting for a couple of reasons. A stronger base gross refining margins and lower windfall tax is something that can aid this segment for them. As far as the Nifty is concerned, down around 40 odd points.
Well, the last 1 hour of the week, back from the brink, breaking the Monday low, then recovering. It's all happening right here. You're with us on Closing Bell. I'm Surabhi Upadhyaya and Nigel D'Souza and Manglam Malu with me in the house today. Hi, guys.
Well, good afternoon, guys. Just an hour or so and then we're off for the weekend, but it's going to be a busy one. Reliance Industries today, ICICI Bank tomorrow. But just take a look at the markets. Easy peasy, having a snooze fest, right? Markets have not moved too much. It seems that we're bracing for a bit of a time-wise correction, right? Just going by it. And maybe one could argue there are enough triggers to even halt the market. Why should it go to that fresh all-time highs? Are the triggers in place? We need a blockbuster number coming in, say from a Reliance Industries. Coupled with that, maybe the IT index stabilizes. And then, in fact, you have ICICI Bank to fire up the Nifty Bank as well. Otherwise, it's going to be rather hard, I think, to go up because the flows as well are drying up a little bit. That's the FI big flows that we have been seeing in there. I'm looking at the options data and the broad band that it suggests is the 17,500 on the downside. If you want to play the range, then maybe you have to buy closer to around 17,500, 17,550. Risk reward is favorable out there. But at higher levels, 17,750 around 17,800, maybe in fact we face some bit of resistance. And just take a look at the options data, 17,700 call. Well, out there, the open interest again has seen a big upswing, close to around 70 lakh shares getting added over there. And take a look at the total open interest. It's going towards that 2 crore shares already. Yesterday as well, we saw a fair bit of open interest build up, but towards the end, because it was expiry, there was some unwinding out there. Now, this is a fresh contract that we're talking about. So just keep an eye out on that strike. These call writers, they're bracing for the 17,770 odd level, not breaking. So that's the positioning. But on the downside, the 17,600 put as well is seeing a fair bit of open interest build up. And out there, close to around 45 lakh shares are getting added. Now, these put writers, they're looking at around the 17,570 odd level holding out. How do you get that number? 17,600 put if you're writing it. You're pocketing close to around 70 rupees. So you deduct that from the strike, which is 17,600. Guys, let's hope for some fireworks in the final 60 minutes odd. Otherwise, it's really been lackluster.
You know, I really thought that when the market started making a move for the downside, not for the sake that I'm siding with the bears, I really thought we're getting maybe the sign of some directional moves because we did break the Monday low. But then it's a recovery back. It seems like we're stuck to 17,600 for now.
17,600. You know, I was just looking at some of the numbers. Just last 3 days, we've been tracking the markets, talking about how flat, lackluster it has been. It's there in the numbers. You know, the highs on April 19th, 17,666. The high on April 20th was 17,684. The high today, 17,663.
Yeah.
Virtually unmoved. The lows, you know, up until the Nifty fell in late afternoon, the lows were also pretty much similar. 17,589 was the low. Then it fell all the way to 17,554. But 17,580 day before yesterday was 17,584 and today 17,554. You look at the range as well. You know, the market hasn't moved much. 156 points 4 days ago. Yesterday was close to around 100 points. The previous day was 86 points, and today as well, despite the big dip that we saw, just 109 points. So that's you know, a magic God-given opportunity for all those who are writing options to pocket that premium. The only thing that really stands out for me today, despite the underperformance of the mid-cap index, is that the Nifty, for the second or the third time in a row, has defended that 200-day moving average. Today as well, it briefly fell below that. There was a scare of almost 40 points below that, 17,554. It's recovered right back up and holding on to those levels. So that is something I'll be watching out for.
You know, since the levels aren't making us any wiser, I'm just going to look at stocks right now. Let's pull up first to start off with the Nifty contribution plate. And it beautifully showcases how things are completely netting each other off. So you have a TCS on the upside, you have an ITC on the upside, and then you have an ICICI Bank on the downside. You have a stock like an L&T on the downside. So it's an absolute perfect netting off. Reliance has moved to the green side of the screen now, but that's not really moving the needle on the index too much. But those two big stocks are obviously in focus ahead of earnings, both Reliance as well as ICICI Bank. Just want to pick out some of the mid-cap names, because today what's happening is that the mid-cap index is actually down. Yesterday the mid-cap index was flat. There was a lot of buying in individual stocks. Today at the index level, this index has been down right from the morning, and it's been underperforming the Nifty. Pull up the advanced decline ratio, and that's something that's changed. Last 4 days of this week, we were talking about a very good market breadth favoring the advances. Today is slightly different. Today, it's been the red line dominating the green right from the morning. I'll pick up some stocks that caught my eye. Some of them, are just moving on their own price and volume momentum, and these are the ones that I'm talking about. Nazara is having a great session today. Its high, I think, was 8.5%. Zomato is up. Delivery is doing better. So there's individual stock buying, and then there are the stocks moving on news. Cyient, for instance, another good number from the mid-cap IT space. Vodafone Idea with Mr. Birla returning to the board. Oberoi Realty is a little curious. I mean, the update looked okay, the fourth quarter update, but maybe there's some profit taking happening, down about 4.5% on that stock. But it's all about, I think, individual stocks.
Well, that's right. You know, the problem is, at least, otherwise, if the market has to go through a sideways correction, you're okay, time-wise correction. But you want those mid-caps to continue the party because they started off this fiscal year in style. Well, plenty to talk about. First up, just take a look at the bottom of your screen. I had a chat with Mr. Anil Agarwal, and, he said that all the payments due at the parent level will be made, and it seems they're moving in that direction. Vedanta Resources says that it will make the bond payments due later this month. So good news coming in there, but it's not, something surprising, because for the last couple of months or so, last 45 days or so, we have been reporting it on the channel, and Mr. Anil Agarwal as well has been quite vocal that he's going to be making all those payments that are due. But what happens from here on is going to be crucial.
But Nigel, also, since we're talking about this, and who better than you to just put this in perspective? It caught my eye yesterday. They're increasing pledges against Hindustan Zinc, right? They're again raising money by pledging more of Hinzinc shares. So obviously the parent entity's cash needs continue. So
I'll tell you what, Surbhi, yet again, in that interview which we had with him, I'd put this question that why are you pledging so much of your shares? And he explained to me that some of this is not pledge against shares. It's you take a loan and this is a top-up. So it doesn't mean that if the stock price falls, it impacts, the pledge gets impacted. It's a top-up on top of that. So it's not a direct share pledge is what he explained to us, at least at that point of time. But that's correct, what you're saying, because that one deal that they proposed of Hindustan Zinc going ahead and buying Vedanta's international zinc assets, that's on hold as of now, and it's unlikely to go through. We'll be speaking to the management later today in the next couple of days or so. And on Monday, hopefully, we get some clarity on that front as well. But that's about Vedanta and Vedanta Resources. How do you position yourself, though, in the final hour of trade? Mitesh Thakkar joins us to tell us exactly that with some closing strategies. Mitesh, what do we say? We speak twice a day. And, we are in this 30-40 point range. Do you trade the index or just avoid the index from now? And let's focus on individual stocks. What's your take?
So, on the index, we've been saying this, and, while the idea is to buy on declines and 17,550 held by a whisker today, I think, the overall setup still suggests that it is a sideways consolidation. So 17,550 is held on. I think, we've got a bounce back from there. And I still believe that, if that level doesn't break, maybe another 2-3 more days are left for this consolidation till the hourly and the 2 hourly indicators, which were extremely overbought with that rally from 16,850 to about 17,850. I think those indicators will come to again, neutral or maybe, slightly undersold levels. So that will, then should provide space on the upside for the next leg of rally to play out. So I think maybe 1-2 days more is what I'm expecting as we approach the expiry next. If we don't break 17,550, then I think, we should prepare for a very strong move on the upside. It's a contracting market, so typically after contraction, the expansion phase should come. Having said that, I have buys on Asian Paints and Pidilites. Both are crude-related stocks. Asian Paints, if you look at the chart, had corrected a lot. I think now it's getting into some kind of a reversal zone. So buy here with the stop at about 28.55 for targets of 29.40. And Pidilite is something which is also made a fresh swing high today. That's a buy with a stop at about 24.20 for targets of 24.90.
It's interesting that you picked both Asian Paints as well as Pidilite from the FMCG space and didn't speak about ITC yet. It's at a fresh all-time high, perhaps an expansion phase coming in for that one as well. Mitesh, 408 on ITC, the biggest contributor to the Nifty in the last 1 year or so.
So I think that's very possible that there's some kind of as you rightly said, expansion happening in the charts of ITC. In fact, I gave a buy call today. The stock has been going through a very steady up move. It goes up, makes a new base, and then again starts moving up. So this is a phase when the market has again after making the base or the consolidation, which was mildly rising between levels of around 395 on the upside to about 375 on the downside, and then we saw a breakout on the 17th of April. Then 2 days of sideways pullback, and then again pick up on the momentum. So the expansion is going on. I think 415 was the trading target, but I think the stock is heading towards 425, 430 zones.
Well, thanks a lot for that, Mitesh. We'll touch base with you later on the show. Thanks so much for joining in and filling us in with your take on the index, as well as a couple of stocks. Manglam, just take a look at delivery. I don't know what's going on here, but in a dull market, that's delivering for the bulls at least.
Have taken place on delivery itself. Nigel, yesterday there was an update that came in on the exchanges that Abhi Kumar Mitra has moved on from the company. Abhi Kumar Mitra was part of delivery or was incorporated into delivery as he was the previous CEO of Spot On. The biggest overhang on the stock was the delay in integration with Spot On, the company that they acquired.
Yeah.
Now the press release says that Abhi Kumar has moved on post the successful integration of Spot On.
Oh, very good.
So now that he's moved on, it means that the integration with Spot On has been successful. So that overhang is out of the way. That is one. Secondly, over the last 3 or 4 trading sessions, if you notice, we've seen a lot of initiating coverages coming in on these new age companies. Motilal Oswal's written on Paytm, on Zomato. Bernstein has written on delivery. They have a target price of 360. They said that the company's taken a lot of corrective actions in the past few months. That will drive earnings recovery. But importantly, we need to watch out for the long queue of PE exits. That may keep, the stock price in check. So those are a bunch of things we'll be watching out for. But for now, the street believes that the company's corrective actions and the fact that there has been a successful integration of Spot On, then it's Spot On.
Yeah, okay. You punned on it before I could. All right. Well, let's ask Prakash what his thoughts are. Prakash, good afternoon and happy Friday to you. You'll find us sounding a little more cheerful than usual for obvious reasons. Let's start with some of these new age companies. Your thoughts on what Manglam said, delivery, even the others, Paytm, Zomato. A lot of those stocks are actually doing well today.
Good afternoon, Survi. Yeah, and happy Friday to you as well. So, yeah, I think we've spoken about delivery some time back. Nigel and I had a chat on this when it was under severe pressure. And that was all thanks to those overloaded exits that were the PE exits that Manglam alluded to. Those were always weighing heavily on the stock from a technical overhang perspective. But from the fundamental business side, Spot On is, of course, a great acquisition. Makes a lot of meaningful, sense in terms of synergies, and they'll be able to, make it accretive very quickly. But what's interesting is that space has had a decimation of the weaker players, and that gives the likes of delivery a lot of pricing power when things start looking up. It's going to be extremely difficult for people to make a comeback. The ones who have not been able to survive, who have scaled down, were critically, impaired. And that's where the space actually loses a lot of the weaklings and the stronger ones survive. Deliveries managed to do that. At some point, the unit economics will start reflecting very favorably. And I've been talking about this at the current levels, or probably even at closer to 380 when we spoke. It's something which has offered a decent risk reward if you are a long-term player. But remember one thing: the new age businesses are very difficult to evaluate on the conventional revenue stream basis. It's more of the opportunity size and how soon you could kind of start leveraging on that. And that goes for Zomato and the Paytms of the world. But Zomato has probably got its pricing right, has started seeing acceptance of passing on those costs to the consumer, and rather than haggle with the restaurant players. So that shift has been very gradual, very quiet, very subtle, but it will start reflecting in unit economics as well. So that's where probably people are counting on. But all of it's going to be in good time. There's nothing tearing her.
Yeah. Right. Prakash, the only non-performing new age stock right now is Nykaa, which is currently hit a fresh low. It's down over 60% from its post-listing highs as well. So we'll watch out for how that pans out. Of course, a bunch of other problems happening with Nykaa as well. We'll come back to you in just a bit, but important flashes at the bottom of the screen.
Yes, absolutely. And this is, of course, exclusive information that our colleagues are picking up. And this seems very, very interesting. We know that there has been a lot of back and forth and a lot of tossing of ideas around what to do with TERs, total expense ratio of funds. And it seems now, what we are picking up from sources is that SEBI is looking at an entirely new category of performance-based charges. Right now, whatever we pay as the expense ratio on a fund, it has no bearing on the fund manager's performance. But it seems that this is a new concept that SEBI is toying with. Right now in discussion stages, we will actually get on this story in just a bit with our colleagues. Could be a very, very interesting one and an absolute, first of its kind idea in the Indian mutual fund landscape. But while we wait to get more inputs on mutual funds, let's look at life insurers, because a lot of the life insurer stocks are actually pressure, whether you pick up an SBI Life, HDFC Life, ICICI Pru. So what's troubling them? Of course, we know that the last quarter was good because you had that big push on the 5 lakh plus premium policies. But what lies ahead? Let's ask Surbhi Sataria, who has the details. Surbhi?
As we've been pointing out, that the life insurance monthly data for the month of March is extremely strong. But the stock prices are giving us a different picture. All life insurance companies are trending downwards in today's trading session. And a couple of reasons for that could be, one, this growth is being driven by the increase in the average ticket size of policies and not by the number of policies being sold. And two, this accelerated growth could impact the numbers for FY24 now, as the growth will be on a higher base. Now, all brokerages also have a similar view, but they still are positive on this life insurance space. HSBC says that they have cut down their FY24 APE estimates by 600 basis points. Kotak says Q4 FY23 was higher than their estimates, translating into a higher base, but they will wait for all companies to report their numbers before they revise their FY24 estimates. MK expects a flattish kind of APE growth for FY24. And lastly, Investec says that the budget proposals will impact the value proposition in the high-ticket segment, but according to their estimates, it is only 10 to 12% of the VNB for all life insurance companies. They're all positive for this space, but APE growth for FY24 still remains a concern.
All right, APE growth for FY24 still remains a concern, and that's why perhaps all the insurance stocks are under pressure. Is that perhaps the reason why even, luxury realty stocks are under pressure as well, despite reporting a good number for the fourth quarter? Overall realty is down about 4% as well. Prakash, your thoughts on both the life insurance space and the real estate space, mainly because a large part of demand took place in the previous quarter because the tax breaks are going to go away?
Yeah. So I think it's a bit irrational to believe that just because there's a higher base, thanks to the lumpiness in the March, month of March, when that advantage was getting over, that you would have on a year-on-year basis slow growth. I think it's a fallacy. The whole idea is that life insurance is a very secular uptrend. I mean, look at numbers from HDFC Life, Mangalam. It tells you exactly that it's not just a March phenomena or a tax break, or a regulatory cutoff phenomena. It's more to do with acceptance. And the more technology comes into play, my sense is, VNB is going to be, the VNB parameters are going to look very different in the next couple of years onwards. So wait for that. There is a level of digitization that's started a bit late in life insurance, given its complexities, and especially the documentation involved, as compared to, let's say, plain investments. And that's where, I think I see higher acceptance. So I'm quite positive on the space, but there's a basket approach that you always take. And some of the bond portfolio, the investments in bonds that LIC has got, they probably are not getting valued at the same level as what you would, have in terms of, what the MTM impact would probably be favorable for them as well. And that's going to start reflecting at some point in time in their portfolio. So all those things will kind of set things right. But yeah, very, very positive on the life insurance space. On reality, I just want to tell you, I think it's just a little bit of profit booking that's come in, given that monsoon will probably slow down things and, the general expectation seasonally, but it's in a great spot. the kind of demand, especially for premium segment. Overall reality, the numbers were fine. I think it's just profit booking because their projects are doing well. The offtake is positive. There's no contraction in demand in at least the luxury housing segment. So people who have very clear identified assets being built up there and an inventory build up there will benefit. Focus on pockets like the NCR or maybe Delhi. Those are areas where there is still a lot of pent-up demand and very less supply, unlike Bangalore and Hyderabad and things like that. So I think you can choose a lot saliently, but real estate is definitely something you should look at in your portfolio for sure.
Okay, all right, got that. Thanks for those inputs. Stay on, Prakash. We'll come back with some more questions. Quick break right now. We'll also be chatting with our alpha manager of the day, Trudip Bhattacharya of Edelweiss AMC joins in.
Welcome back. Markets as flat as can be, but we have some news that's flashing for you on the screen, and that could be a sentiment negative for stocks like Dixon Technologies, because the Karnataka High Court has rejected Xiaomi's petition challenging seizure of around 5,500 crores by ED. Remember, as a sentiment negative, it could impact Dixon. But Dixon, as Mangalam was just telling us in the break, that in the past they've said they're not a very, very big client. But as a sentiment, it could hit them. And that's why we're seeing the stock react. Remember, it saw a bit of a bounce from the recent lows. But now, in fact, on the back of this news space, it's moving a little bit lower. Prakash, what's your view on Dixon? There are a lot of triggers in store. The problem is they haven't achieved guidance in the past. FY23, they've kept scaling back. And, this sort of issue is a bit of an overhang. Your view?
Yeah. So honestly, if you look at structurally where it's positioned, Nigel, the history, the glorious past that it has had when it started off scaling up and when PLI was introduced, that's going against it because the expectations are so high that anything that's short of those high expectations starts kind of sounding negative. What they're doing is a great job. There's no denying that. But we've seen stretched valuations. So there's been PE contraction thereon. Then we've seen EPS reductions and expectations of some sort of a lumpiness in the EPS towards the second half of FY24. So all of that expectation probably makes it to be a little bit of a soft counter. I mean, it might not go through a very deep price correction, but it could go through a time correction till things look up and catch up and expectations get kind of calibrated. And this news that you kind of talked about, it is negative for sure, because if it's not going to get stayed, that means there's going to be much more damage that can happen and percolate to the P&L as well from the client. So, that's definitely a negative, and that's why the markets will be reacting to that. But I think you could give it some time to kind of consolidate and settle down and look at where the EPS moves or what pace it moves before you take a call on it.
That point, although the management on its part multiple times have joined us and said that issues like this will not impact any of their receivables or the deals that they have with them already. So we'll have to watch out for how this pans out. As of now, looks like it's a bit of a sentiment negative. But I wanted to know your thoughts on footwear, on the footwear space, Prakash, because that's been on the run over the last few trading sessions. If you just look at it, something like a Mirza International up 10% locked in upper circuit right now, and it's not the big front foot players, it's the back foot players which are now catching up. We have names like Liberty Shoes without any rhyme or reason up around 35-40% this month. But now the big boy is catching up. We have Bata, which is moving higher and has moved to the high point of trade. Because of Bata's underperformance over the last 1 year or so, its valuations have become a lot more palatable as compared to some of these other listed players like Campus, Metro, etc. Would you take a look at Bata right now?
No, I've always liked the company. What they've done to reinvent themselves has taken much longer. They'd articulated a vision which was towards 2025, which probably seems like a bit difficult, a bit challenging to achieve in terms of some of the store metrics and some of the product lines that they wanted to launch and the price points that they want to kind of move up to. So what's important is you rightly mentioned, look at Mirza. I mean, Mirza is the titan of footwear. It doesn't need to sell too much. What it sells is of value. It gets them great, margins, and it always keeps on selling better, right? So that segment keeps on growing. It's not impacted like the Khadims or the Liberties of the world. But what's happened is some of these footwear companies like Campus and all, which have a different range or probably a much more narrower range, have actually got too much of premium thanks to the history of Relaxo and all those other names that we've seen in the past. So that has helped them achieve PE expansion, Mangalam. But if you look at Bata, you really get value. You get a very veritable, solid business, underlying business within the footwear space, which is irreplaceable in that sense. But what's impacting them, or what's been ailing them, is the fact that they've not been able to leverage on all that in terms of revenue growth and margin growth. But that seems to be probably happening as they get closer to that vision that they'd articulated. But I would definitely love to look at it if there's any trigger that there is an improvement which is probably more secular than just a flash in the pan.
We'll figure out how long this flash lasts. Last couple of days, at least 2-3 sessions, footwear has been quite in step for the bulls. Well, Prakash, we will leave you to now enjoy the rest of your evening and your weekend, and touch base again next week. Have a good one.
You too. Thanks.
Okay, well, lots to talk about with our next guest as well. Tridip Bhattacharya is joining in. He's, of course, CIO at Edelweiss. So we will get to Tridip. I think, we have him with us. Yes, so we do. Tridip, great to have you on. Thanks for joining in. I was just taking a look at some of the, portfolio holdings. Mangalam and Nigel were telling us about some of your, big holdings, both on large cap and the mid cap fund. Banks definitely make it to your top list, right? And the big boys, HDFC Bank, ICICI Bank. So I want to ask you this, that incrementally from here on, are you still expecting big moves in banking? Because banks have flattened out in 2023 after a stellar 2022. Would you expect bigger gains in the rest of the year?
I think overall banks are probably one of the sectors where on valuations are in our favor. While in other cases, valuations are at average. In certain stocks, in the case of some of them that you named, the valuations are still lower than about 5-10 year average. So valuation case is in our favor, number one. Number two, in many ways, fundamentally, they are in a very sweet spot. So they've gone through an NPA cycle, the balance sheet is clean. There is credit growth that is happening in the economy, and them will benefit from that. But that probably people know. What we will see over the next year or so is basically as some of these provisions reverse and some of a good amount of profitability or lower provisions leading to earnings growth, which will probably stack up quite well when you compare with other sectors which are there or thereabouts. So I'm very confident that on a relative basis, banks will for sure do quite well over the next year or so. In absolute terms, we have to see where the stocks really trade versus their valuations and take a call accordingly. But you are absolutely right. We are positive on lending financials, if I may call it that way, across our multiple portfolios that we do so, because we think we are at that stage of the economic cycle where credit growth is picking up, loan loss provisions are at low, and fortunately, we don't have some of the excesses like what we see in some of the other geographies.
All right. Hi, Tridip. Good afternoon. Tridip, I wanted to ask you, banks, they expected to outperform. The street is betting on that. But IT, the street is split on that. So I want your view. But before that, let's hear out what the Cyient management had to say earlier today. Remember, those numbers were quite good. And now they're talking about achieving that revenue run rate of $1 billion by the fourth quarter of this year. We'll hear him out and we'll come back to Tridip.
We've taken into account some degree of macro uncertainty, which we all can't escape. But taking into account some degree of macro uncertainty, we're still quite confident that we have a run rate towards that number essentially in Q4 of this financial year. There is still a lot of work to do, but we believe, will we be there? Surely thereabouts, but we're working hard towards getting there. So that's still a line of sight. There are some obvious risks in areas like semiconductors where there is a slowdown that is anticipated. But I would say, I think now we have a well-diversified portfolio. If you look at the 4 reporting sectors that we have, which is transportation, sustainability, connectivity, and new growth areas, they're all very balanced. I mean, they're all, a fourth each of the services business. Or if you add the manufacturing business, that's also about the same scale. So these 5 pillars that we have, I think are working out very well. And let's face it, right? There were times when some of the sectors that we were in did not perform very well compared to the others in the market. And I'm referring to the aerospace sector here particularly. But now that sector has come back quite strongly. So I think we've positioned ourselves quite well.
Well, Trideep, Cyan Management says they have positioned themselves quite well. What about you? How have you positioned yourself? I'm looking at your portfolio. You have Infosys, you have Persistent in there as well as a couple of those IT names among others. But your view on the IT pack right now, and also last couple of days, Mastech delivered a good set, your Cyan did deliver a good set, but the larger names disappointed. So how are you positioning yourself on IT on the whole, and within that, between large and mid caps?
Yep. So I think it's a great question overall. So we actually went underweight IT around about beginning of last year, and that has worked out over a period of time quite well for us. What has happened is that over a period of time, over the last 3-6 months, we have covered our underweight. And at the moment, we would be probably marginally underweight, stroke neutral in our portfolios. The reason why we are not overweight is, now, of course, it's out in public that we always thought that this result season, the earnings estimates need to get calibrated for FY24 versus how may actually turn out to be. And Infosys did that. We saw TCS also talk about the same. That is being done, or that has been done so already, and the stocks have taken one knock down. Now, beyond that, it's basically how the individual companies are positioned with regards to discretionary spend in the United States, banking and financial services sector, and also the exposure to US. So the companies which are relatively low indexed in these areas are the ones which selectively would do better than others in the context of the sector, given that the macro growth rates have been set by the biggies. So that's why some of the individual mid caps or small caps, as they reported and as they will report, you will see these nuances play out over the rest of the result season in the context of IT. So sector-wide, we are probably neutral. Stock specifics would do the talking from here with regards to IT in the very short term. But somewhere in the next 1 or 2 quarters, we think that the sector will probably bottom out, and it will be good to add even to on a broad-based basis and probably go overweight at some point in future, subject to evaluation.
Right. From IT, we move to ITC, the big index heavyweight among your top holdings. Done extremely well for you all. Just wanted to know what's the runway you foresee for this one in the consumer space. And the second one is Reliance. Again, a big overweight for you all, the second largest in your large cap fund. Reporting numbers today, what is it that you'd like to see in your numbers, for you to continue to hold, your conviction here?
So ITC has been a meaningful long-term overweight for us across portfolios. And we've always thought that in the context of the consumption sector, which is reeling under the pressure of inflation, this is one spot where, historically we have kind of put our bets on, and that has worked out well for us in the past. We think that overall, the cigarette side of the consumption would probably see good amount of volume growth overall, and that will and that has helped us. Of course, going forward, we will see how that space pans out, but that continues to be a meaningful bet on us. With regards to Reliance, while the absolute weight is on the higher side, but I think on a relative basis versus that of benchmark, we would probably be underweight. We think that the earnings would probably be middle of the road, where, while we can't talk stock specific numbers here, we think that overall will be just about versus that of expectations there and thereabout. I think what we would look to here would certainly be the progress on the retail side and on the new initiatives, what they plan to do, which will probably be more valuation trigger. On the renewable side would be the areas that we would kind of look to understand, apart from the core business, which I think broadly people anticipate.
All right. Trideep, just request you to hold on to that thought. The Hindustan Zinc numbers are flashing for you in the screen. And as we know, the holding between the Government of India, Vedanta, as well as LIC is nearly 97%. So very limited float in the market. But just to analyze those numbers, top line is more or less in line. The margin is a little bit better. And that's because the zinc cost of production without royalty, that's come down by close to around 6% on a sequential basis. So you're bracing for a bit of cooling off. And I think 5 to around 6% was the expectation. So it's cooled off by that much. That's why the margins are a little bit better than that. But more importantly, we know mostly what's happened in the past quarter. You want to know what's the view from here on. And they've given their guidance numbers as well. And they're factoring in a mild growth on the mine metal production. If you look at it, they're estimating that between around, 175 to around 101,000 odd, which is a little bit higher than what they've done in the past year. But the good news is they're expecting the zinc cost of production to come down. So just to give you a number, in the last quarter, that's in quarter 4, it's at around $1,214 per ton. Now, they're estimating in the coming year, it'll fall by at least $40 to around $100. So the band they've given of cost of production is around $1,125 to around $1,175 per ton. So that's the cost factor that's playing out. But we'll have to wait for the management commentary, what's happening with regard to the divestment, what's happening with regard to their plans on the international zinc business as well. Not a big mover on numbers where there's no float in the market, but just thought we'll analyze that on the margin a little bit better. But nothing really to take home with regard to this.
But good to have that perspective on the numbers, and on the slight, you can call it maybe side beat on the margins and the EBITDA front. Market, by the way, is back in the green. So Nifty has managed to claw its way back on the other side. Some of the gainers, ITC, TCS, HCL Tech is positive now, 1.2% higher on HCL Tech as well. Infosys is up. So there's some incremental buying on IT and on a few consumer stocks as well. That's the story. Actually, even Wipro is higher, HCL Tech. Most of the IT big names are on the upside. Well, we do have to take a break, and we would also thank Trideep on that note. Trideep, great to have you on the show as always. We look forward to our next conversation. You have a good weekend. Well, get into, thank you very much. We get into that break, but as we do that, let's get you a big voice from the auto sector. Of course, there's been a lot of chatter about whether the Indian government will perhaps not extend the EV subsidy scheme, the FAME scheme that is beyond beyond March 2024. A final decision, of course, has not yet been taken. Earlier in the day, we caught up with Rajiv Bajaj, MD of Bajaj Auto, to get his view on this matter.
I have not understood what the logic is for a cap on two-wheeler pricing, for example, to be 1.5 lakhs of rupees, because that is the bone of contention as I understand it. I mean, today you can buy a 20 lakh car and get a 2 lakh FAME subsidy on that, and that's absolutely fine. But I cannot buy a 20 lakh motorcycle and get a 2 lakh subsidy on it. Why? 50,000-60,000 is of course not small for any consumer. In the last 3 years, the prices of two-wheelers have gone up by about that much, as you know, for various reasons. And you've seen how that has impacted demand. I am not a fan of subsidies of any kind. And I do not think India is going to build a EV future based on subsidies. Subsidies going away, in my view, should not really have that big an impact in the long run, because the future of EVs in India will be built on the back of sound strategy, not subsidy. Subsidy is not a strategy, and in my view, subsidy disrupts strategy, subsidy masks reality, and subsidy blunts innovation.
Welcome back. The frontline indices virtually unmoved, but a lot of mid-caps currently at the low point of trade. We have Chennai Petro at the low point. Alongside that, Vadilal Industries at the low point. And Rajratan Wire, ever since it reported its numbers, where the profits fell by about 45%, the sales also fell by about 11%. We've seen a big dip on that stock. So Rajratan Wire comes up for you with a cut of almost 7%. But time now for our favorite D-Street Chatter segment, where Nimesh gets us an insight into the dealing room. Nimesh, for the last 3 trading sessions, we've been speaking at this time, and nothing virtually has happened at the frontline end of things. But mid-cap's not doing too well today.
Well, I mean, today you can call it as a dull day, because the Nifty is flat, mid-caps have underperformed, and even the flows are quite muted, is what I understand. So not much happening even in the dealing rooms. I guess, maybe a bit of a weekend factor as well that's playing out in the broader markets. I guess from a directional point of view, the 2 large heavyweight earnings, which is Reliance today evening and ICICI Bank over the weekend, will be very important, and that will mean a gap up or a gap down for the Indian market. So that's something to track as far as earnings are concerned. There are a lot of sectors which are under pressure today. You call it insurance companies, those are down, metal names. Even the cement companies are seeing a bit of profit booking. The only sector which has seen a bit of a relief rally is technology names. Now, even within technology, the feedback is lack of selling than genuine buying interest, which is back. So again, looks like more of a short covering and a lack of selling kind of a relief rally in the technology names. So that's the overall feedback. Again, as I said, a bit of profit booking in the broader market as well, maybe because of the Friday phenomena, but nothing much is happening, whether it's broader markets or whether from a flow point of view. So relatively a dull day from a markets point of view.
It's been a dull day, a dull week as well, I guess, Nimesh. We've been searching for direction. Totally range bound, right? But there's a lot of stock news and stock movement. So tell us anything exciting you're hearing today?
Well, it's a difficult day to find out. so do call chatters, but still I've managed a few of them. So the first one is Zomato. That stock is buzzing in trade. There was a block as well, close to 30 lakh shares. So the disclosures would be important. But beyond that, I guess the bigger thing is there is a hope or a buzz of a very large block deal coming very soon in Zomato. So that's something to track as far as Zomato is concerned. Again, remember, for every now and then the strategic investors, including the Chinese investors, keep selling. So that's something to track as far as Zomato is concerned. The second stock is PI Industries. While it's buzzing in today's trade, this week the stock is up 5% in a dull market. And again, the big indication is that maybe the company is very close to an overseas acquisition. Remember, for a very long time, it's a speculation that they want to get into the pharma business. So that's something to track in PI Industries. The third stock is Ujjivan. Not much in terms of news, but purely buzzing on back of strong flows at NFI. So the delivery volumes are expected to be quite high in Ujjivan today. And the last stock is Bharti Airtel. Within the large cap, this is one stock which is seeing some bit of selling pressure back, and looks like some long only funds are active sellers. So that stock is not too much under pressure, but the flows are on the sell side.
Right, Nimesh. Thanks a lot for that. In fact, trust you to extract some juice out of the grapevine of the dealing rooms, even as the markets are extremely dull, huh? But, let's talk about a bunch of stocks, trades that you should initiate today for a reverse one on Monday. Mitesh Thakkar joins us back. Mitesh, a bunch of stocks moving to the high point of trade right now. From the FMCG pack, it's Britannia, TCS. From the IT pack, Wipro doing well too. Your thoughts?
Okay, Mangalam, difficult for stocks to escape your eye. I have Godrej Consumer on the list. That's the BTST with a stop at 980 or 979 and target of 1005. So yes, the FMCG pack is looking very good, and I think all these stocks are showing at least signs of a short-term uptrend. I picked up Godrej CP purely because it's one of the stronger and the outperforming stock in the entire sector. That's one, and the other one is FSL, First World Solution. That's the BTST with the stop at 113.9 for targets of 117.
All right, Mitesh, thanks very much. Hopefully you can have a good weekend, and I'm sure it'll be more active and more happening than the week has been in the market, right? So you have a good one, and we'll catch you with the markets again next week. Well, with that, let's get back to those highlights that you were seeing on your screens just a while back on the possibility of a brand new category in the mutual fund arena, where the fee or the total expense ratio is going to be determined by the performance. So SEBI seems to be planning to launch this category. That's what we're picking up from sources. Shivani Bajaj has all the details. Shivani?
Sources have told CNBC-TV18 that SEBI is planning to permit a new category of mutual fund schemes where asset management companies will be allowed to charge fees linked to the performance of the scheme. The proposal is still under consultation at the moment, and more details on what kind of schemes will come under this new category are yet to be decided. According to a source with direct knowledge of the matter, SEBI is looking to allow additional charges to be levied by mutual fund schemes that consistently outperform their benchmark index and offer higher returns. This move comes after SEBI recently spoke about rationalizing total expense ratios in mutual fund schemes. Industry sources suggest that this proposal is aimed at encouraging better performance by mutual funds.
Well, extremely important story. We'll come back, and in fact, we'll try to get an update on that front. But the big boy is going to be Reliance Industries. But before we go to that one, ICICI Bank, if you can just pull up the stock price, there were close to 20 lakh shares that got traded in the last few minutes. Remember, there are two stocks that we're looking at. One is ICICI Bank, which comes out with a set of numbers tomorrow. I think 18.5 lakh shares odd have got traded in the last few minutes, and there's a large trade that took place. Interesting to see who were the parties. And the other one is later today, we have Reliance Industries that will be reporting its numbers. So let's get you a preview on Reliance Industries. It's going to be reporting its numbers. Sonia is standing by to run us through the key expectations from the company. Sonia?
Well, it's a big day. Reliance Industries is all set to announce its Q4 earnings. Remember, the stock is down 7% in 2023 so far, but it's a decent quarter expected this time around. First, let me take you through all the key numbers that you can watch out for. On the revenue front, it's about an 8.5% growth that we're looking at compared to last quarter. While on the EBIT, there could be the EBITDA could see a growth of around 5.2%. Margins could be a tad bit under pressure compared to what Reliance did last quarter. But on the profitability front, it's a 12% growth that we're looking at somewhere around 17,700 crores. Now, as I said, both the consumer as well as the commodity businesses for Reliance Industries have done decently well this time around. First, let's take a look at the oil to chemicals business, which is the key reason for the recovery this quarter. There's a sequential recovery that we're expecting for a couple of reasons. A stronger base gross refining margins and lower windfall tax is something that can aid this segment for them. In fact, looking at the gross refining margins, Singapore gross refining margins improved to $8.2 a barrel in Q4 compared to $6.3 a barrel last quarter. There's also a demand improvement seen because of the China reopening, and that has aided the numbers this time around. In the consumer-facing businesses, Reliance Jio has slowed down a tad bit, so we are seeing the revenue and the profitability growth moderate for them. In fact, it could be the lowest in the last 7 quarters. On the average revenue per user as well, it could be absolutely flat this time around at 178 rupees. A couple of reasons for the slowdown, but primary reason is that there's been an absence of a tariff hike, and that has caused Reliance to see a slowdown in its growth rate in the telecom business. Let's move to retail now. Retail growth is expected to be about 6% on a sequential basis, coming in at a little over 46,650 crores. These are the recommendations put out from Nomura. And on the EBIT side, we're expecting about 3,800 crores versus 3,600 crores last quarter on a sequential basis. So clearly, as you've seen, there's a decent growth expected. Some of the businesses like Rel Jio could see a bit of a slowdown, but it could be offset by good growth in the oil to chemical space.
Okay, well, that's Reliance and all the expectations over there. Let's go across to Sudeep Bandyopadhyay. He's joining in. Of course, he's from Unitrade Capital. Sudeep, thank you for joining in. Two big earnings. The market wonders whether Reliance or ICICI Bank's numbers can move the needle on the index. What do you think?
Well, absolutely. I think we desperately need a trigger for the market to move. So the trigger can definitely come from either or both of these counters. As far as Reliance is concerned, I think, apart from whatever Sonia was mentioning, I will like to also hear the commentary on the financial services business demerger, where it stands, and if they talk about any plans. I will also be curious to understand or hear any commentary from them on their green energy business. I think these are the two areas which market will want to hear quite a bit about. Of course, Jio, we have to see what they talk about as far as the 5G expansion plans are concerned. While there is a long-term potential of ARPU increase through 5G expansion, there is a short-term challenge in terms of cost and incremental borrowings. So we'll have to really see the commentary very, very carefully. As far as ICICI is concerned, bank is concerned, they delivered splendid set of numbers last quarter. All the parameters you can think of, they did beat the expectations and outperformed their past quarters. So, we don't know what next. But yes, things are good for the BFSI. And considering the circumstances, considering the way things have moved, the bank should do well even in this quarter. The only challenge is, unless there is a really breakout performance, the valuation doesn't probably permit a major jump in prices from current level.
Right. Sudeep, your thoughts on Indus Towers? The reason why I ask this is because Vodafone Idea are doing extremely well today on hopes of some stability coming in, some credibility coming back once Kumar Mangalam Birla is back on the board after 2 years. Does that mean one should play this, if at all, via Indus Towers, or should one actually look at Vodafone Idea as well now?
Well, I'll be careful, Mangalam, in doing either. Yes, definitely, Mr. Kumar Mangalam Birla joining the Vodafone Idea board is a positive signal for the Vodafone Idea shareholders, and we will hope and pray for some better outcome. Vodafone has been trying to raise capital for the last, 1.5, 2 years almost now, at least what I recollect. And nothing has really materialized. So under the circumstances, unless the promoters are committing funds, we don't know whether fundraising will be easy. And unless there is a fundraising happening in Vodafone Idea in terms of capital infusion, it will be extremely difficult for them to continue, and Indus Towers and other creators to get their money back in a hurry. So I will wait and watch. Positive development, definitely. Nonetheless, I'll prefer to wait.
All right, Sudeep, thanks a lot for joining in and giving us your insights on the BFSI space and the telecom space as well. Hope to speak to you soon again. But with that, it's time now for a short break. As we do that, here's a quick programming reminder. Our weekend special editors roundtable is coming up at 4:30 p.m. today. Let's get you a sneak preview of what are the themes that we will be discussing today. FIIs have become buyers in April. What is the data suggesting in terms of the kind of sectors and stocks where they were buying? Anuj will join us with the analysis. And as we were saying, there's a lot going on in the electric vehicle space as well, as the Indian government is not in favor of extending the EV subsidy scheme beyond March 2024. Sonia joins in to analyze what this means for the sector and the way forward for the listed players.
Well, we're increasingly seeing firms with lower ESG scores finding favor with investors. Nimesh gets us a complete data analysis on this piece. And I'll also present a piece on analyzing the market trajectory and the key indicators that suggest when the markets have bottomed in the past. So you don't forget to tune in to CNBC-TV18 at 4:30 p.m. later today. Welcome back. Another day, and we're going to end as flat as can be, but there were a few winners and losers today. So though the Nifty ended packed with a cut of only around 5 points or thereabouts, and it was a very, very range-bound trade like we've been seeing for the last few days. Let's run you through the list then. Stocks that did well today. ITC, smoking hot as always. That stock, in fact, almost went to around 410 and ending virtually at the high point of the day. So good going out there. HCL Tech came out with a good set of numbers. TCS, remember the stock has seen a fair bit of a correction in the last few days or so. But that stock, in fact, popped up in trade, up close to around 2% in trade. Britannia, that was up close to around 2% in today's trading session. And Asian Paints as well was up 1.5%. HDFC was up only around 0.5%. But when that big boy holds up with the green, it definitely helps the Nifty scores. What didn't do very, very well? HDFC Life. Well, the numbers look quite good, the operational numbers that they reported. The problem was that the street believes there's a one-time effect. And not just that, they're saying maybe it can impact the growth in FY24 as well. So that's why from starting off well in the green with a gain of around 2%, the stock ended down with a cut of around 3%. Tech Mahindra, some downgrades, some earnings estimate cuts as well. Post the numbers that have been declared from some of their peer group. So that was a relative underperformer, down close to around 2.5%. And Adani Enterprises as well was down close to around 2.5% in trade today. Not much action, guys, but the mid-cap index ended lower, but plenty of stocks on both sides of the fence.
Yep, on the mid-cap end of things, one can't say that the index ended flat because we did see some selling. In fact, by the end of trade, we had more number of stocks that declined than the number of stocks that advanced by a factor of 3:2. And if you just take a look at the top losers in the mid-cap end of things, we had the insurance stocks not do too well. So ICICI Pru post its numbers were down about 3% Overall Realty, again, the same problem as HDFC Life, where good numbers came by, but that was perhaps on account of a few one-offs. So that stock was the top F&O loser today. Dalmia Bharat didn't do too well. Weakness continued for something like a Max Financial, TVS Motors and Aditya Birla Capital as well. In terms of the stocks that gained, Vodafone Idea, a show of confidence coming in with Kumar Mangalam Birla joining the board once again, so that stock up 6%, and that supported a couple of other ancillaries as well, the likes of Indus Towers. Strides Pharma, Aarti Industries continue to do well, as did Lupin, and we did see some purchase in a couple of these discretionary names like Pidilite, Page Industries and Bata.
Well, that was pretty much it. I think Oberoi Realty is the one stock that we haven't mentioned, down about 4.5%. That's a big mover on the real estate side of the market. And then you had Vedanta cool off a little bit, 1.5% down. Hindustan Zinc's numbers also came in, so that was a stock in focus as well. Basically, we're wrapping up this week on an extremely flat note. The bulls will have to take heart from the fact that at least the lows of the week were protected. We didn't sort of, crash down through that level of 17,575 thereabouts. That was a low that was made on Monday. But then the bulls aren't able to make any headway, and therefore what we have is a bit of a stalemate. I think 2 days for both the bulls and the bears, both camps to take a breather and recollect their thoughts. And hopefully we have some more headway and some more traction come next week.
All right, well, that's about the markets today, but we've completely run out of time on this edition of Closing Bell. But you don't go anywhere. On the other side, we'll focus on the big news makers of the day. Stay with us.